The oil market is down almost 5% at the time of recording this video, and let's talk a little bit about why. And even if you don't trade oil, this has huge implications on other areas of the market, and we're going to talk about how there might be some opportunities setting up. Let's jump into this. So oil falls on the Saudi price cuts that are coming out. So what we see here is that oil prices were down more than 4%, with crude oil testing $70 per oil and paring gains from last week as Saudi Arabia announced that it will cut key crude prices for buyers in all regions for February amid a softening demand outlook. So basically they're quoting demand outlook. Let's have a look at the price action that's following. Okay, so clearly oil is just absolutely tanking here. Pardon my really cheesy pun. Oil is in fact tanking. We see a 4.5% move lower here. And again, basically getting the confirmation from Saudi Arabia that they are feeling and seeing the lack of demand in the market has oil selling off big time. But what does this actually mean if you're somebody who's an FX trader or you're trading gold or indices? What does this actually tell you about the market from a fundamental perspective so that we can look for price action setups that could agree with this move? So I can tell you right off the bat in terms of what this is doing for the index traders out there, it's moving markets higher. We see the NASDAQ and S&P 500 up 0.34% and full percent respectively at the time of recording this. Doing well for my position. I am still in this one, up $2,000 on the S&P move that I took in our signals group last week. And what I'm looking for here is some follow through, but this move actually really helps. Now, what does this do to the currency world? Well, if you're a CAD bull, definitely not great, because this, of course, the lowering prices in oil are going to negatively impact the CAD. So, you know, we can see that in certain areas. If we take a look at Euro CAD here, have a look at Euro CAD, we can see that the Euro is gaining strength against the CAD, basically showing some weakness there. But it also has market implications for sort of all sorts of ranges. You see the dollar index moving down here today. You see gold also selling off as well. And it does seem like commodities are taking a little bit of a hit off of the back of this. In regards to the dollar, it does look like the downtrend is still intact. On Friday on the daily chart, we had a very nice candle closure here, basically showing a lot of indecision despite the NFP jobs numbers, which were decently good. They were strong jobs numbers, but there were some revisions to October's numbers that kind of put a little bit of a thorn in the side of the numbers, and there was not enough conviction here to change the dollar downtrend, in my opinion. And still, the course of action as we turned our attention to Thursday's CPI and Friday's PPI numbers, which will give us inflation reads. The overall trend here, in my view, for the dollar is still to the downside, and that hasn't changed based on the NFP number. So to me, path of least resistance, yields are coming down, and that all is dragging the USD lower. So for me, I'm going to be looking primarily for dollar bearish setups, and that is why I am actually long the S&P 500. By proxy, a weaker dollar, basically the idea that interest rates are expected to come down, stock market's going to love that unless there becomes a recessionary fear, which is another story that I don't think we're quite in that area yet. So right now, things look good for S&P bullishness, gold bullishness, if we can find a setup. We'll talk about that here next. Here is gold. We'll pull up the technical chart on the daily level, and you can see prices trying to hold support here at 2,020 an ounce. I like to execute off the 4-hour chart. So for me, what I am personally looking for is, you know, we've had this consistent downward trend structure. We broke this level here pretty decisively. We're now retesting this. For the bulls like myself out there, I would like to start seeing some higher highs, some higher lows before I can actually solidly start buying gold again. So that's what I am personally looking for. By the way, if you're wondering how I can trade gold as a US client, I'll leave brokers down below for those of you who are wondering how I can do that. All of them will be found below in the description. And by the way, even if you're not in the US, there's some cool perks there if you sign up with the brokerage. You'll also be, of course, helping my YouTube channel, and I will very much appreciate if you use those links, and you'll get some extra special perks for using them as well. And on the currency side of things, I am still long my Euro USD position. This signal was called out last week as well in our group, and so far seems to be holding well. My stop loss is below this previous low. If markets fail at this key level, I will go ahead and stop out. And let me go ahead and get in front of my own trade and kind of play devil's advocate. Nick, you have CPI and PPI coming out on Thursday. Couldn't that completely reverse your trade? Yes, that is true. But if it does, then I want to get out of the trade. So I don't mind holding it. My thought process is that inflation is coming down unless that changes, I want to stay long euro against what I believe to be weakening US dollar. So I am long euro dollar. My stop loss, like I said, is below the lows, and I am looking for an opportunity to trail this stop on the lower time frames. Any updates I make will be shared inside of the group. And just because I've mentioned it a few times, here's what the VIP group looks like. You can see the trades that we're taking inside and out. Frank, myself, and Ivan, we all share of our trades. We have been doing this together for some time. And like I said, here is my euro position. We share full breakdowns and analysis with each one of our trades. So I am long euro. I mentioned I also have an index trade open, the S&P 500 long, and I also do some stocks, options, and of course gold, commodities, etc. So if you'd like to get these notifications sent directly to your phone, there is a link down below in the description. It's the very first one. If you click that link, you'll be connected to someone on my staff who can give you more information about memberships, pricing options, and will give you a nice extra discount if you mention that you were watching this video. So make sure to shoot them a direct message, ask about the membership, and we'll be happy to give you some more information. And full transparency, these are my current positions that are open inside of the group, outside of the euro dollar position, as WeBull does not offer that. However, that is open on another brokerage that also, like I said, can be linked down below in the description. So I currently have, let's go through this really quick, my S&P trade that I talked about. We're currently floating, just moved $2,600 here. We also have, of course, an XLK. This is the technology ETF. We also have a Russell. This is the Russell 2000 small cap stocks, and an energy ETF. Currently having 2 trades in the red here, 2 trades in the green. Overall doing just fine. We'll see how this one wants to play out. And as I mentioned, if you're a US client looking to trade things like indices, gold, etc., use the link down below in the description if you'd like to get free shares when you sign up with WeBull, and I'll also get one as well, so you'll be supporting my channel. So I appreciate if you use it. You don't have to. You could also just sign up for WeBull, but if you'd like to support my work here and these videos are helpful to you, consider doing that. And if you can't sign up for WeBull, I would also encourage you to hit that thumbs up button on the video and subscribe so you can get more content like this on a regular basis. Okay, up next, the latest COT data is out, and what we can see here is this is the overall net positioning of institutional money, long versus short contracts that are currently opened. And we can see that still overall the Japanese yen is pretty bearish, the Australian dollar same as well. The S&P slightly more bearish, but this is what I like to point out in my videos. This is a longer term outlook, I think, because what we're seeing here is the net positioning of institutional money, but oftentimes institutional money is much longer term. What I find to be more useful is if you scroll down here, you can take a look at the money flow of the COT data. And this is the week-to-week filings where we can see where money is moving in and out of the markets. And I find this to be very cool. We have a Dow bullish week. We have a Canadian dollar, the NASDAQ, the Kiwi, the Australian dollar. These are your 5 top most bullish assets. You can see the net change is pretty remarkable here on those markets and showing a little bit of risk on sentiment, which preceding this week actually seems like a really strong move. Now, on the flip side, you can see that the US dollar had another sell week. So institutional money seems still very bearish overall USD, or at least increasingly bearish on the US dollar. And at the same time, you have US oil being sold. Look at how you can't make this stuff up sometimes. A huge sell week over week on US oil just before the Saudis announced that they are, changing their price model. Really interesting. And if I had a tinfoil hat on right now, I would say there's something going on there. But again, you can track this data yourself if you have a copy of the Edge Finder. That will also be linked down below in the description, or you can chat with us about pricing options and details. By the way, a cool little plug to our website. We actually have some free market data available. If you head over to a1trading.com, you'll see here, if you go here, you can actually go to Commitment of Traders. We do have a partially free version of the COT data that you can have access to 100% for free. So if you do not already have it, you'll see it comes with a lot of cool net positioning data that might be useful to you in your trading. So again, these are totally free resources that we have available on our website. You can just click the COT data tab here, and also you can request an Edge Finder trial while you're on the page if that would be something useful to you as well. Here's a quick look at updated retail positioning as of the latest data we have here updated today, you can see that overall retail traders are actually very bullish oil, which is especially a contrarian signal today. With a big sell-off in oil, it's interesting. You commonly see retail traders start to bet against big moves. And so we see that a little unfolding today here on oil. So same thing with USD CHF and Australian dollar. We get bearish contrarian signals as retail seems very bullish overall. On the flip side, you have dollar yen, which is a bullish signal as retail traders seem very bearish on the pair. So a couple things to consider if you're a currency trader. For those of you who watch gold very closely, we're at 50-50, so no real signals on this side. And holding myself accountable, I pointed that at going into January and February that I was pretty bullish on gold. And the reasoning for this is that historically speaking, the last 10-year average, we've seen pretty strong months for gold in the opening months of the year, January and February. Now it's still early in this session, but you can see it's not starting out very well. Here is, of course, the current year performance, and we see gold actually starting the year negative. So we'll see if things can reverse. I will be looking for setups in favor of a reversal, looking for a positive January and February. We'll see if I'm correct about this. The cool thing and also the not so cool thing about data is that data helps you to build more confirmed trade ideas, but they don't guarantee trade ideas, right? So when we do all this data research, when we do these videos, clearly you could probably tell there's a lot that goes into the tools that we're using as well as the preparation for trades. There's a lot here. But the reason there's so much is that even with all this data, sometimes you still get it wrong. And that's the reality of trading. Nothing is a perfect indicator, and that is why trading is difficult. However, we can still use our tools, use our data the best we can. I am still generally more bullish than bearish, and I will look for opportunities to see if I can play this correctly on gold going forward. And we see yields coming down here today. This is the 10-year yield, and what we can see, it's coming down, just crossing back underneath that 4% level. It seems that 4% actually is holding up as a good area of resistance for yields. And also we see the 2-year also dropping pretty good as well, showing that expectations are still in line, that interest rates are coming down this year, and interest rates coming down should have a weakening effect on the dollar and a strengthening effect on indices and actually gold. So that's why I continue to come back to that thought process that I think gold is getting oversold here, and that we could find some opportunities on the lower time frames. So I will keep you guys updated with any thought processes that I have or updates on gold. And again, remember that you can get updates to signals that I take inside of the VIP that we linked in the description. So I think also one thing to point out here, I don't know, I don't have it in the brokerage account that I show, the WeBull account, but I am actually very much positioned in some corporate bonds as well as TLT, treasury bonds. So I think that that is kind of another area where I think a weakening dollar could help with this story. So TLT, this is of course 20-year plus treasury bonds. This is kind of a conglomerate ETF that tracks bonds, and you can see bonds have had a terrible sell-off, but I believe that things have gotten overdone. I'm looking for continued push to the upside. And just for those of you guys who care, if you made it to the end of the video here, here's your word of the day. Comment, do me a favor. If you made it this far, we are a good bit of ways into this video. First of all, if you could do me a favor and hit this thumbs up on the video down below, let me know you made it this far. I do watch very closely the number of likes each video gets, so hit the thumbs up button. And if you made it to the very end, comment USHY. This is an ETF that I own that tracks corporate bonds, high yield corporate bonds. And the reason I have this is that I think, again, the dollar is expected to get weak here. I've been in this trade for some time. I've been riding this one up. And again, I like USHY. I've been in this and I continue to hold this position. And in fact, what I'll do is I will actually show a screenshot here of my Robinhood account, which is where I actually trade some of my bond ETFs. I know, really boring bond stuff, but if you made it this far in the video, I can tell that you're really interested. So comment USHY, in the comment section down below, and I'll try and heart your comment. Thank you very much for supporting my videos. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern. broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.